I would like to start with saying I'm going to talk about prices, and I'm not going to talk about the three most important things, perhaps, which are quality, compatibility, availability, as we have talked about today. I don't disregard them, but I'm not going to talk about them in my presentation. They do set a very crucial backdrop for what we're talking about. So, I'm going to be talking, I can't even see my own screen, but I can there, yes, excellent. We have a green curve showing gas oil prices. I'm going to be talking about prices in Rotterdam mostly today. So this is historical prices and also a couple of years of forward curve there at the right. The green indicates gas oil. The grey indicates high sulfur fuel oil. 12 months ago when we met clients, 12 to 24 months ago, we were using this historical picture, backdrop, as a sort of an indication of what they might have to expect with the fuel oil change coming up in 2020. We had a high price, and these are monthly averages, this is not the daily price. We had high prices of something I can't see, I believe it was $1,200 on a monthly basis for gas oil, for low sulfur. We had, I imagine it was around 600 if I remember correctly for fuel oil, for high sulfur. But we also had lows due to the extraordinary volatility, of course. But, you know, in combination, this spread between the two, we've seen it in the 600s, I believe, back in 2008. 2008 was a gas oil squeeze. We're not going to talk a lot about that today, but it was a very strong period for gas oil, particularly due to, for example, Beijing Olympics. And since we're expecting a gas oil squeeze type market going forward, we thought it was a fairly good analogy to look back at what happened then. But anyway, we want to try and reconstruct the reality a little bit here now, because this is only 10 months from D-Day. So now the market has changed a little. But we need to start with looking at Brent, because Brent is the tide that lifts all ships. This is 2020 prices, so it's a forward-looking price for the Brent calendar year. Okay, so it's a little bit less volatile than the spot price is, but you can see it's had a pretty wild ride over the last couple of years. I guess this goes back to summer of 2016, if I remember correctly. I layer on top of that residual fuel oil, high sulfur fuel oil in Rotterdam, again 2020 prices. You can see, well, I can tell you that historically, while there is decent correlation, it is not the strongest of correlations of all the oil products, and it's also particularly volatile, as has been mentioned here before today. It's interesting perhaps for you to see what happened late in 2016 when the 2020 price dropped very significantly to the left of this chart. That was when IMO made their official, at least as good as official, decision to commence the cleanup from 2020. I would also like to say that during most of 2018, after that drop early in 2018, the correlation with the Brent has been particularly strong. Fuel oil has been very strong in the front end, as in the spot markets that you pay on, and put on your ships. It's also been very strong for 2020, bizarrely perhaps, given that we all know demand is going to fall away. I now add gas oil to the mix. Same old curve, but this is looking at 2020 forward prices as well. It sits at a much higher level than fuel oil, of course. Historically, it sits at the spread, I guess, around $250 premium or something. The spread between the two is volatile, much more volatile than perhaps this should suggest. And this spread also, you will see earlier in this chart in 2016, the spread rallied considerably when IMO made their decision. And it also rallied considerably in 2018 to a high of $370 in May. But even $370, I don't think everyone necessarily saw that as high as it could go, obviously with the with IMO kicking in next year. It has also sold off. It sold off towards the second half of last year. I would suggest this could be a lot due to Brent being lower, crude oil falling. Perhaps also other reasons. We are starting to understand that refineries will probably find a way, if not, well, price will always find a way, that's for sure. but refineries will probably find a way to come up with compliant products. We see scrubber installations on the rise, so the demand side is also obviously taking its steps. But we need to talk about 0.5% sulfur. We don't need to talk about gas oil. Gas oil will be an alternative out there, but if you can use 0.5 and you can get it a little bit cheaper, that's better, isn't it? So in this chart, I have added a new product, if you want. It's a component that I have made out of mixing low sulfur fuel oil, 1%, and gas oil in a ratio of 55% gas oil to 45 HSFO. This is a much lower price than gas oil. It is a conceptual price because I just mixed two products out there, and I don't know how the suppliers are going to blend it exactly, but this is one way of looking at it. And that is the green line you see here. It's much, much lower than gas oil. However, last week we started actual trading in a 0.5% VLSFO contract. And lo and behold, it started trading even below my synthetic product. Possibly surprising, and certainly a good signal to anyone without scrubbers on board. Again, I can't see my own numbers there, but I know I have averages up there for what 2020 looks like. I believe my price is 470 for that product, compared to well over 600 for gas oil. This also means that the spread, of course, is much lower. The all-important new 0.5 VLSFO is the orange line to stand out, next to the beautiful DNB green. The narrowest spread between the two, representing the smallest problem, if you want, is the compliant one. If you ask me, do I think it will go up or down? Well, I think it looks very cheap and probably will go up. But I can't argue that with what is trading. There are trades taking place, so it is representative. Overestimating the spread. You know, this is where the new product comes out. We're looking back at historical prices here, so I don't have much history for the new product. I'm using the traditional, I think what we read about in the press, IMO spread, scrubber spread, call it what you want, but that's between gas oil and HSFO. That's in gray. The least representative, if you ask me, of reality. Then you have my custom-made 0.5 blend in green, much, much lower. But then you see the orange, which is the actual compliant. Fortunately for ship owners without scrubbers, it comes out lowest. But if we use 0.1 gas oil to talk about scrubber spreads, perhaps it's been the wrong spread. Perhaps it has looked a little bit too good financially to install scrubbers. Obviously, we saw during 2018 scrubber uptake, this is just DNV numbers, scrubber uptake rallied considerably. Again, possibly part of why the spread seemed to trade in a little bit. Obviously, now we're even getting the open loop scrubber sort of discussions. Personally, I think scrubbers will be a good fit. I imagine these spreads will trade out again, as I just alluded to, but it's looking a little bit less of a no-brainer than it did only recently. So what can the market offer? MGO, whether you expect to burn more of it or not, or if you just happen to be an Ecazone operator, I think we can safely say that the demand is expected to rise, both from direct use and also because you will have to dip into this pool to blend the correct product, or the 0.5 sulfur product. It would be lovely to see my numbers, but I'm indicating historical performance versus what you can trade in the forward market today. It's obviously, the forward curve is higher than what we've seen in the last 3 years. 3 years takes us back to the absolute bottom of the market in January 2016. But I can say the forward curve is not ridiculously high priced in compared to relatively recent performance. I also have 5-year index, 5-year averages in there, and we're considerably lower than them. So gas oil, we expect higher demand. On the HSFO, on the other hand, we expect lower demand. And yet, the forward curve is rising. We expect that we'll be able to use more of HSFO as scrubber penetration increases. And I guess that's what is reflected in higher forward prices for HSFO. If you have a scrubber fitted, I would consider looking at these prices. Lock it in, get a supply contract with a floating component, and get it locked in the prices. As JFK said, the time to repair the roof is when the sun is shining. I guess I don't have time for questions, do I? Any questions?